Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, and it is it's about 7:30 a.m. Coming to you from the trading floor on Monday, June 23rd. And it was an active weekend with the United States directly interjecting itself into the war between Iran and Israel. I want to cover some of those points and their implications for the commodity markets. As we look at what happened over the weekend, we saw the United States make a precision strategic strike on three key nuclear facilities in Iran on Saturday evening. It was overnight, their time, a little after 2 a.m. Iran time, causing extensive damage to all three facilities. Now, it'll likely take some weeks to fully assess the damage done to these facilities, but the initial assessment suggests that Iran's nuclear program has been dealt a devastating blow. Now, no offsite releases of radiation have thus far been detected, according to the International Atomic Energy Agency. The strike included 14 GBU 57 bunker busting bombs weighing 30,000 pounds each, targeting two underground facilities, two of the three that were underground facilities, one of them more than a half mile below the surface of the ground, along with more than 24 Tomahawk missiles to finish the job. Some reports saying maybe 30 Tomahawk missiles. The United States carried out the surprise attack without a single known shot being fired by Iran or without a single Iranian military aircraft leaving the ground. President Trump gave a brief statement then that evening to the nation telling of the strike on Saturday night, followed by a more detailed press conference to describe the operation by both Defense Secretary Pete Hegseth and Joint Chiefs of Staff General Dan Kane on Sunday morning. Now, President Trump had warned Iran also in his talk about retaliating against any U.S. persons or interests. Iran has promised retaliation and did send some more missiles into Israel, but for now, there is hope that Iran's retaliation will be measured so as to not trigger a larger response by the United States against its oil interests. President Trump made it clear that our issue is not with the Iranian people, but rather with Iran's nuclear program, which Iran had insisted on keeping. Now, overall, the United States had been encouraging negotiations for a long time. In fact, when President Trump came in a little over 2 months ago, in fact, he made the statement, you have 60 days to negotiate. And Iran said, we're not going to negotiate our nuclear program. And both Israel and the United States had said that Iran cannot have a nuclear program based on its stated commitments to eradicating Israel and to attacking the the big Satan, which is the United States in their view. Iran's regime likely feels that it needs to respond to save face with its followers, but the hope is that it does so in a way that doesn't escalate the situation. Let's be clear, the U.S. strike on Iran was a high-risk operation. It could result in widespread peace breaking out in the region in the months and years ahead, or it could dramatically escalate the conflict into a regional or even global problem. Iran's regime is intimately involved with Russia and China. The U.S. strike on Iran removes the leverage of a potential nuclear strike that had held over much of the world. Iran's parliament reportedly made a decision to close the Strait of Hormuz over the weekend, that narrow passage between it and Oman, through which oil tankers carry roughly 20 million barrels per day, in addition to net liquefied natural gas. But doing so is up to the supreme leaders now. Iran has made similar threats over the past 4+ decades, but has never succeeded in fully closing the strait. Now, some of that oil could be moved via two east-west pipelines to other offloading facilities that cross Saudi Arabia with a combined capacity of 6.5 million barrels per day. A little less than 1 million barrels per day of that capacity is already being used, so that leaves roughly about 5.5 million barrels of the 20 million barrels could go that way, but it'd still leave a significant global shortfall if it happened. Nonetheless, the United States has sufficient military assets in the region that it would likely quickly get involved in directly protecting tankers moving through the strait. Oil is the energy that fuels Iran's economy. It's the one thing that it has to keep its economy going. It has been quietly moving oil into the floating storage tankers sent into the Indian Ocean. and that it can continue to sell on the global cash market to finance its operations. Now, China is the largest buyer of Iranian oil, although its purchases have also slowed of late as President Trump has increased enforcement of sanctions against Iranian oil. Israel and or the United States could very easily take out Iran's energy assets as they have done, similar to what the United States has done to its nuclear capabilities with the aid of Israel. Both want to avoid doing so, though, because both hope that one day Iran's people can be ruled by a peaceful regime as they were prior to 1979, and they do not wish poverty on the region, which would create even more problems. But that is still the threat that they both hold over Iran as they try to get Iran to the negotiating table. Now, global fertilizer supplies are currently receiving very little focus, but they should be. Global nitrogen supplies are currently growing tighter due to geopolitical challenges. Ukraine hit one of Russia's largest nitrogen fertilizer plants earlier this month, putting it out of commission for an unknown length of time. Iran is the world, and Russia is the world's largest fertilizer exporter of nitrogen fertilizer. Iran is the number 3 exporter of urea nitrogen at 4.5 million metric tons per year. Much of that was shut down after Israel struck the South Pars natural gas field, which provided the feedstock for Iran to produce the fertilizer in the early stages of this war. Qatar is across the Persian Gulf, and it is the world's number 2 exporter of urea fertilizer at 5.2 million metric tons. Its production has not been impacted at this point, but its ability to export the urea would be impacted if the Strait of Hormuz is shut down. Egypt is the number 3 exporter of urea at 4.3 million metric tons. Its production was shut down when Israel preemptively shut down its gas fields that provided the feedstock to Egypt's fertilizer production facilities. Now, Oman and Saudi Arabia are number 5 and number 6 exporters of urea. Their output is also at risk, especially Oman, if the strait were to be shut down. Most at risk currently are supplies for the upcoming Southern Hemisphere growing season, including the critical Brazil market. Now, as we look at the markets, we saw when they opened up overnight that the stock futures dropped precipitously, and crude oil rallied sharply up to WTI was up to above the $78 mark. It's now trading below the $74 mark as I speak to you, as you've basically erased all the gains, as traders have started to realize that it's unlikely that Iran either has the capability or the desire at this point to challenge the United States to try to shut down the Strait of Hormuz. That has also allowed the stock market to calm down. And in fact, as I speak now, I'm seeing stock futures for the S&P 500 index and the NASDAQ moving into positive territory, having erased overnight losses. As we look at the grain and oilseed markets, well, they're mostly lower, but that's been a typical pattern of late for Monday mornings. And that's because we get the crop progress reports on Monday afternoons. The weather forecast for the corn soybean belt in the Midwest is generally good over the next 2 weeks. And the expectations are this afternoon's USDA weekly crop progress report will again show crops in very good condition. We also have harvest progress picking up momentum for the winter wheat crop, increasing the amount of wheat that can be sold against the market. Supplies of U.S. wheat, even including the carryover of old crop supplies, are big. We did see some strength earlier this morning for hard red spring wheat futures because that crop has been showing some problems, but even those gains have been evaporating as we get closer to the opening bell. So I leave it with you. Be sure to like and subscribe if you want to continue to get these updates from the trading floor. I'll continue to come to you as there are additional updates in these geopolitical tensions and to discuss their impacts on the commodity markets. Thank you.